Hello everyone, welcome to this lesson where we are going to talk a bit about indicators. And the first indicator that we would need to look at is called the moving average. Now the moving average is just the average price given for a particular number of days. So the moving average is one way you can actually punch in a certain number to see what is the average range of closing prices for that time frame. Then you can see the direction of price movement. The popular moving averages that are used is the 200-day, which is usually used for long-term entry into trades. Then there's the 50-day moving average, which is sort of the mid-range. Then there's the 20-day moving average, which is usually the shorter time frame. So if I go to indicators, I can choose MA. Then it should show me moving average. Then here I want to start off with the, beg your pardon, I closed it. So I'm going to go MA. Then I'm going to go MA again. So now I've got three. So I need to change the first one. I'm going to come to the settings. The first one I want it to be the 200-day. So there it is, you can see the blue line is the 200-day. The second one I want it to be the 50-day. So the 50-day is the brown one. The third one I want it to be the 20-day. I just want to change the color here so that it doesn't sort of look like the 200-day. Okay, the purple can work. So now we have the three indicators. Usually how people trade is that if a share is below the 200-day moving average, then they are looking to sell it or to do what is called shorting. When it moves above the 200-day, then they choose to do what is called going long. In other words, they are buying and holding the shares. Now, when you look at this blue line, which is the 200-day, you can see it's quite far from the price action. So it doesn't really, apart from telling you that you should be long, it doesn't really give you any other information that you can use. Then if we look at the 50-day, which is the brown line, you can see that as price moves closer to the brown line, it sort of moves back up. So it sort of comes down. As it meets the brown line, it moves back up. Comes down, it moves back up. Comes down and breaks it, then moves back up. So you can see here that the 50-day is a good guide, or it's working as a good dynamic support and resistance. So if you don't want a resistance, which is a line, you can use this dynamic resistance support level. When it comes near, you buy or you add to your position. When it goes further, you can choose to take profits. When it comes back, you buy again. When it pulls away, you take profits. The 20-day one you can see is actually in between the price range, so it wouldn't work very well as support or resistance for this chart that we are looking at. However, when we reach this point, we can see that the brown line and the purple line are actually in the mix of the candles. Here we can see that now the chart is in a ranging point. So in other words, from here to there, the price is really not going anywhere much. This is the range where you can say, I'm going to sell everything, find another share which is in a good position to trade. Then when I see that this one is ready to move again, you come back and you take your position. You might not sell everything depending on your strategy. You might sell maybe 50% to use that money efficiently in another part of the market. But here we see that the price continued moving around the same range until it went down. So as it went down below the blue line, we can now expect the price to remain under the blue line for quite some time. So here now someone would be looking at opportunities whereby if price comes close to the 50-day line, then you want to short the share. When it moves further, you take your profits. When it comes closer, here you would now want to look at it and say, do you want to remain short? You can look at the price action that there's a lot of buying action happening. Then you would want to look at it. If you say I'm going short, then probably by the close of this or open of this candle, you say the short position is not working. You buy back, you let it move towards the 200 day. As you see, the 200 day now is acting as resistance. When price reaches closer, started moving downwards. So you can sell your long position if you are long. Then you can now look at this point and see that it's now moving between the 50-day and the 200. So you can go long here. As it moves closer to this point, you want to sell. Then look again for an opportunity whereby price might return back up and overcome the blue line, the 200-day. And then you want to go long because price is now going to be trending above the blue line. So that is how you can use the moving average indicator in conjunction with your trades. Until the next indicator, have a great day.